So essentially, we're in Hong Kong. We're looking to become one of the biggest, we are already one of the biggest players on the PayFi stage. So very excited to be here talking about PayFi, future stablecoins, global and local. So I'm going to start with brief introductions. I'm going to just go starting from, I guess, from Rita's side and working backwards. And I'll introduce myself last because I'm just the moderator. Speakers comes first. Rita, handing over the stage to you.
Thank you. Hi everyone. Thank you, Jackee. I'm Rita, CEO of RD Technologies. We are a fintech group. We do a few things. So we run a stablecoin payment business under the brand of Orista Pay, which basically is powering B2B payment business with a stablecoin. And we also run a stablecoin, on the issuance side under the brand of RD Innotech. We were in the stablecoin issuer sandbox in Hong Kong. Nice to meet you all.
Thank you, Rita. And moving on to Evan. Evan, how does Animoca brands, I think everyone knows, but could you also share a little bit about how you guys interact with stablecoins and PayFi?
We can't talk about stablecoins, so I'll talk about...
Sorry, PayFi, my bad.
Rita knows. So Animoca brands, we are an operator, enabler, investor. So we have 600 companies under our belts, under different verticals. Our history came from gaming, but we are well beyond that in terms of verticals. We're in AI, DeepIn, infrastructure, RWAs, and the S word I cannot mention. We believe that in Hong Kong, it's actually very important to participate in this particular space, meaning the RWA space, enabled by certain infrastructures that Hong Kong is now creating. And there is obviously a great opportunity to have internationalization of assets that originate from here.
Thank you, Evan. Sudeep?
Hi, thank you for having me here. I'm Sudeep, the CEO of STBL. STBL is effectively providing the infrastructure for the stablecoin 2.0. So what we actually enable is users to come in with their choice of collateral, maybe like Biddle, Ondo, Franklin Templeton's Benji, and effectively mint the stablecoin element, which is for the liquidity and the payments, and also segregate the yield in a separate token as an NFT called YLD. So what that actually enables people to do is to effectively use their stablecoins and also retain the yield. So we're seeing people move towards fairly more of now a contribution sort of a structure rather than an extraction structure earlier with stablecoins, where effectively the yield was being retained by the issuer. Now we'll see a lot more ecosystems issuing stablecoins now with more regulatory clarity. And we are pretty aligned with the way the regulations are shaping up around the Genus side as well. So thanks again.
Thank you, Sudeep. And Lawrence, you're up.
Yeah, okay. Happy 5 Day. Okay.
Very
yeah, I'm Lawrence from Fortinet. Okay. Actually, I'm working on cybersecurity domain more than 30 years. That's why sometimes Jackee call me Sifu, master of cybersecurity. Actually, back to Fortinet. Fortinet is a global leading cybersecurity company, right? Founded in 2000. And listed on Nasdaq 100 and SP 500, S&P 500. Actually, Fortinet provide we call that advanced AI-driven cybersecurity platform. Okay, protecting from your device endpoint to network, also the data, your application. Okay, in everywhere. Okay, we can protect your assets on premises, on cloud or hybrid cloud, wherever. One first. Special for as a cybersecurity company, because we also invest and build our own hardware ASIC, okay, to accelerate the security function, okay, without latency, okay. So that I think in Hong Kong, most of banking and finance adopt our solution as their security gateway, and also, okay, in some high frequency trading, platform also use our product. Okay, of course, Fortune 100 top 10. Okay, finance service company also our client. To be honest, more than I think at this moment more than 900,000 customers worldwide. Okay, using our Fortinet. So our Fortinet provide very comprehensive and broad solution to protect anywhere. Okay.
Thank you, Sifu. Very, very detailed breakdown of how security is important, especially for the PayFi industry. I'm Jackee from Leadsourcing. We essentially provide corporate clients with a railroad, a bridge into Web3, accessing customers for them. And on the other side, we also help Web3 clients boost corporate adoption, primarily B2B or B2B2C, specializing only in RWA and PayFi. So thank you very much for spending Friday with us. Jumping into the first questions, again, starting with Rita. So stablecoin market hit over $200 billion in 2025. Actual business adoption outside of crypto trading, though, much smaller. So for this panel, what is the honest answer? Is institutional business case for stablecoins proven, or is it a science project?
Yeah, great question. So actually, I was answering a question on consensus stage that which stage we are in stablecoin adoption. Is it like, my answer was we are very close to the plateau of productivity. So I think, why? Because there's a growing trend of, regulatory framework coming into place in various jurisdictions, right? It's becoming more and more, regulated, so the industry. That's one thing. And second, education. So I think, what happened in this region in, I think, the last 1 to 2 years is actually a huge wave of education, right? Like last year when the law passed in Hong Kong, we all know it generated lots of, waves and waves of lots of hot discussions. And what it did is actually educating the whole market, actually all walks of life. I think, just maybe a few months ago, you still talk to some banks, or institutions or traditional business, exporter, importers, they're still, talking about stablecoin like with suspicion, right? Now they understand, this is actually something that the regulator will regulate, and it will become more and more legit. So I think education was also, we had a huge wave of education. So I think that's why we are definitely seeing, from our experience on the ground, talking to different types of businesses, whether it's a traditional trading business or institutions, financial institutions, banks, et cetera, I feel the adoption is there already. It's about to grow exponentially. So I think we are definitely, I think it's definitely not a science fiction, but it requires the whole industry, right? And also probably not just one jurisdiction. It's probably a global collaboration when it comes to, for example, cross-border payment, to make sure that stablecoin can be mass adopted, right? Well, what's mass adoption is that actually for every corporate and individual, it becomes a norm to hold stablecoin in your account. That's mass adoption. So I think that's going to happen in 3 to 5 years.
Very good. Looking forward to the day when we can all pay with stablecoins. Quickly moving on to the Evan, same question. Proven or science fiction, science fair project?
Well, if you talk about stablecoin is simply an evolved version of money, right? So there's no way this is science fiction, otherwise Rita wouldn't have a business, right? And I respect Rita a lot, and there's a lot of vision in the company that she is running right now. So that's point one. Point two is think about how we are conducting payments right now, right? If you go to wet markets off that, you still pay by cash. Taxis, you pay by cash. But, frankly speaking, not everyone here goes to wet market, just honestly. The rest of you don't even carry wallets, right? The only reason you carry a wallet is because you want to pay for taxi. And that's the only place where you seriously need cash. Now, if you go to mainland China, for instance, which I know many of you do, at least those in Hong Kong, it's like basically you don't spend any time in Hong Kong, you just go to China. You go, and then you pull out your wallet, you post a piece of paper, they look at you like you're an alien. right? It doesn't matter what currency pull out, it can be RMB, but it's like, it's that evolved version of money, right? Hong Kong sort of invented octopus, right? Near field, NFC, and it's sort of thereafter fallen behind, but it's moved to sort of more cashless society as a result. Then you have credit cards, and China is probably the most advanced today, and whatever sort of leftover money that you have, you can actually invest it. So it's already, you're totally in the digital wallet kind of a era. Now, what's stablecoin and ultimately is blockchain money, right? Be it tokenized deposit or CBDC, we don't have to go into that, but yeah, we believe in stablecoin because it can be privacy preserving, and the adoption is really about programmability, right? So for instance, my son goes to boarding school in the US, I can program it so that he only buys certain things, right? So that's really useful for me. And of course, when you're talking about payments in terms of programmability, when is that particular payment active, and when, anyway, programmability is very, very important. Also, it's also a gateway to RWAs, which is the big thing, right? So think about the where it came from in the first place, right? It first came from crypto trading, right? So when you're getting out of your Bitcoin and Ethereum, where do you park it? You don't park it back to banks because there are rails and there's T+2. You talk about 24/7 atomic settlement, programmability. Therefore, you park it somewhere else, right? And that's where stablecoin will come in. And imagine so much assets. Now, we're not saying that all the assets from mainland China is going to come right away to the international markets, but we obviously would know that Hong Kong is the gateway to Chinese assets, to international liquidity. So that RWA is eventually going to flow through Hong Kong, and that's why Hong Kong has stablecoin ordinance, has sort of Project Ensemble, and all of that for tokenized deposits, also the CBDC. All of these will come together in a way that facilitates that liquidity to be had in international exchanges. So it is sort of what I'll call the first inning of a 9-inning game. That's baseball, and that's not great. But maybe the first 2 minutes of a football match, right? That's sort of where we are at. And the use cases, obviously, is going to explode from here.
Again, very happy to see the positive outlook. So far, no one thinks it's a science project, which is great. So I'm just going to drop that part of it. How do you guys see it at STBL, Sudeep?
Yeah, I think I pretty much agree with what Rita and Evan said, and I think just few encouraging stats over the last few years. While we see there's an excessive stablecoin usage on the crypto side, which is obvious, 80 to 90%, but the good part is the non-crypto part, which is in terms of payments and in terms of institutional custody and usage of stablecoin has quietly been increasing over the last 2 to 3 years. I mean, in the last 1 year, significantly so, even though it's a small proportion. We're seeing people like Stripe, MasterCard, Visa, all of them getting some infrastructure ready to effectively support stablecoins. Most importantly, I think the way people are using stablecoins is changing because there is a lot of RWA being tokenized. I mean, just look at money markets. There are more than, effectively almost like trillions worth of assets that are willing to effectively come on-chain from off-chain, and already happening with the likes of, BlackRock, Franklin Templeton. So now that needs to be actually utilized, and effectively, the change that is going to happen now is in terms of how to monetize those assets and use them as some sort of liquidity in the market, which is what stablecoins are best positioned to effectively drive. And now with the regulatory clarity coming in, you'll see more and more of regulated players also coming in, which will only increase the adoption a lot more. And nobody is denying the speed and efficiency and cost effectively. So I think we are in a stage which I would call probably like a growth phase. We'll be moving towards maybe the maturity stage probably maybe 2 years from now. And I think it's only going to start increasing, and we should probably look at something like a SWIFT, which is already having a certain amount of volume, and we are just a fraction of that.
Amazing. So one more point towards growth phase. Now, Lawrence, Sifu, what do you think? From a security perspective, where are stablecoins at?
Yeah, from security point of view, okay. Actually, hard to say proven or a science product, right? Okay, but I want to point out one thing. If every new service or platform, okay, launch into internet, all right, or informal digital world, okay, it is expand your attack surface to the hacker, okay. How to react this, okay. When you new services open to internet, okay, hacker, I'm pretty sure that, okay, hacker have found a way to hack into, okay? From traditional, I think traditional brand or banking, finance, individual, okay, go through a long journey to how to adopt the security, how to adopt the security framework, okay, to secure their service platform. Maybe, for example, starting from how to identify the attack, okay, how to detect, how to protect, how to respond, even though how to recover. Okay, from Web3 or stablecoin area that you must, how to adjust those area on that, all right, okay. If this only one you fail, you may lose the cost very huge, very large on that from my point of view, okay. So how to start and maintain the security standard is very important, okay. From my point of view, Web3 or stablecoin, from my point of view, regards on security maturity framework or level, on a from education point of view, okay? Traditional standard, okay, banking and finance standard is university. But I think that Web3 stablecoin in a primary school at this moment, okay? So I think by the evolving the cybersecurity technology adoption in Web3 or stablecoin become more mature and mature to the university level, I think stablecoin platform or this kind of payment must, I think that this is the trend, okay, must be proven on the market, right?
Thank you, Sifu, for pointing out what is very easy to overlook in terms of the financial opportunities, the importance of security in stablecoins as we move towards the university level security standards in the stablecoin space. Graduate level. So next question for the panel. I'll also again start with Rita. So we're in Asia where we're showing very strong stablecoin activity, Web3 investments, and we're actually leading globally in terms of institutional adoption of stablecoins. However, despite this momentum, what are some hurdles that are actually blocking greater adoption in your perspective? Hurdles.
I think hurdles, let me think about it. A few things, I think. So as I mentioned, it is, like true that, we're getting more and more regulatory framework in various jurisdictions, right? But it's still in the process, right? So I think in Hong Kong, of course, the law passed and it became effective August last year. In US, they had Genius Act, but it's not, actually Genius Act is not effective yet, right? It will be until end of the year. The regulator is still working on the regulatory guideline. And on the European side, MiCA is still in the phase of implementation throughout the European nations. So I think it's still in the process, so that might lead to certain uncertainty, right? For example, like the mutual recognition, or recently there's this word multi-jurisdictional compliance. Is that a good thing or a bad thing, right? Like I think so. Uncertainty like that might lead to certain short-term behavior from the players in the market. So that's one thing. And second, I think it's still education, even though I think we had a huge leap on that. But still, like when we go to the, like really on the ground, when you talk to different businesses and individuals, users, you still get a lot of, like quite surprising stories. Like for example, we were talking to an exporter who said he has some stablecoins that he received from some overseas counterparties, and then he used some random wallet, right? And then that wallet is not doing any scanning for them or any risk control for them, right? But they had to use it. They just threw sort of some researching and they found this wallet. So I think there's still a lot more education to be done to the different part of the user bases. That's the second thing. And third one, I think it's also the convergence between traditional finance and Web3. That's also, it's not a hurdle, but it's still happening. It's also in the process of increasing mutual understanding. Like when we talk about the new sort of financial infrastructure where in the foreseeable future we'll see the parallel existence of fiat and stablecoin, right? That means, to be able to move seamlessly between the two layers, on-chain and off-chain, is super important. But when it comes to off-chain, you still need to be plugged into the traditional or existing financial rails. And how we make sure the two worlds understand each other. And for example, we talked about risk control, how we make sure that we apply the off-chain risk control framework together with the on-chain one, so we make sure that our customers are safe, and like the regulators are happy, right? So I think that mutual understanding is very, very key as well. It's not necessarily a hurdle, but I think we still need to build more on that front in the industry. That's why, at RD, our slogan is bridging Web 2 and Web 3. So I think bridging that two worlds, increasing the mutual understanding from both worlds is quite key as well.
Thank you very much, Rita. So 3 points for everyone to remember. The first, regulatory clarity. One hurdle that we're already solving, working towards solving. The second one is basically more trust education. This is one I see every day as well, as we talk to merchants, trying to get them to adopt PayFi solutions. And finally, of course, bridging Web 2 and Web 3, as we say, bridging the two.
Yeah, Jackee, I think that word is very key, trust, right? Actually, anything dealing with money is a business of trust.
Exactly, building trust. Okay, amazing. Evan, same question. Any hurdles that you think we need to overcome?
I'll just give it a little bit of a lateral around what Rita's talked about, because those are obviously the barriers, right? But step back a little bit and thinking about what is this whole RWA and stablecoin being, financialization of these assets, what does it actually do, right, as a net positive? What it does is that you're putting assets on chain, which means that you're borderlessly putting financial assets on a public infrastructure, be it Ethereum or Solana, take your pick, that can be accessed borderlessly everywhere. Therefore, it enables your bank to essentially be your mobile phone. Now, this is a very, very different future, ultimately, right? And there's a quarter of the world's adult population that are unbanked today because it's unprofitable to do so. Thereafter, you can get 24/7 hourly yields, atomically settled. And whatever it is, be it 10 Hong Kong dollars, you can invest it into perhaps private credit or private equity if you want, but I don't know why you would do that. But but whatever it is that's on chain across the world, be it in in Japan, in Brazil, whatever is put on chain natively, you can invest into. That's the vision ultimately, right? But what are the barriers? The barriers is that even stablecoin regulations, Genius Act, Hong Kong Stablecoin Act, right? They don't interact. So you can't even pair it at this point in time on a regulated basis. If you want to use it, yes, you can still use unregulated stablecoin, but you don't have the transparency. So for institutional adoption, the domiciles need to come together and make this real. Otherwise, we are still in this sort of trade war thing that's going on right now. It's not connecting global liquidity. That's a pretty big barrier ultimately, right? The other thing that we have to talk a lot about is the asset availability, right? Right now, what is RWAs, right? In terms of investable assets, it's really around money market funds, and it's around basically figures HELOCs, right? And it's made it into like top 10 asset that's listed now. Home equity line of credit, right? And it's essentially a private credit with a track record. It's on, right? It's kind of like what you call this, like a second mortgage, right? And have a track record of that. And it's natively on-chain. That's why it's popular. But at the end of the day, you don't have assets that are actually natively on-chain. If you're wrapping real estate that actually have a different legal construct onto it, and you try to trade it on-chain, you're trading a wrapper, right? The ownership ultimately is offline, it's with the land registry, whatever. That doesn't work, right? You can't really work in it from the perspective of allowing that liquidity to be had other than trading a wrapper. So assets need to exist natively on-chain before liquidity can really be had. So asset issuance and asset issuers will need to go through a sort of a process of actually believing these are what is the future. Now, if you ask banks today, how do they look at their business? They totally understand now, especially after Trump has been on board, that their business model is under threat. The infrastructure will be blockchain-based going forward, right? And they are leveraging blockchains today for cross-border payments and all of that. And finally, I'll say the following, right? And this is controversial, and I don't mind creating controversy, right? I think the way regulators have to think about regulations has to be completely different. Because we always think about consumer protection. We're still really worried about mini bonds and like your JPEGs and all of that in Hong Kong and scams, so basically rug pulls and all of that stuff. Yes, that is very important, and SFC and SEC, all that, really they're here for consumer protection. But the era of self-sovereign investing is here. People are in the new generation going to all the philosophy of it. If you read a lot of literature around, you find that the youngsters are really nihilistic. Nihilistic means that they are really willing to take risk and take it upon themselves to really understand that the whole regulatory landscape needs to switch from, protecting the dumbest person to educating so that everybody understands that when you are looking at an on-chain finance world in the future, there is no way to fully regulate. Just as there's no way to go on the street and basically take down every scammer. You can only take it after the fact. What is the Holy Grail? The Holy Grail is decentralized finance, right? I think we all know that sitting here. And everyone is going after it. Franklin Templeton is going after it. BlackRock is going after it. It's just not regulated. At some point in time, these rules will be written so that decentralized finance will be proper. But for that to happen, you also need proper regulations and you need proper investor education. And you can't just say that, oh, this is for institutional investors only. I think we're still having that approach. I think that's wrong. If we really want to have this part of the world lead in sort of RWAs, we have to think through a different approach by envisioning what the future looks like before we regulate. Otherwise, we're just doing exactly the same thing. And all the assets are trading on wrappers, on centralized exchanges. It's just not what we want to see.
On behalf of the 1.4 billion people who are unbanked in this world, I think if they hear what Evan just said, that they're going to be very, very happy to hear that. I just saw the sign that we're still running out of time, so I'm going to start jumping through questions quicker. But Sudeep, what hurdles are you guys seeing?
Yeah, no, I'll maybe just very quickly build on 2 points in the interest of time. I think most of it was covered. So I think the biggest challenge that we see right now, one is, again, the areas that are showing the highest promise in terms of stablecoin adoption, the regulations there are still unclear. So for example, areas like India, or for that matter, certain LATAM countries. And for payments and cross-border payments to effectively be effective, these jurisdictions will have to move on from what they're looking at as probably a digital currency rather than a stable coin for it to be productive. And the second most important thing, which I think is definitely going to be a problem to solve, is how do people get yield opportunity access out of their stable coins. So for example, if you want to take BIDL on chain, you need to go through a process of onboarding. And that's not going to be easy for everyone to do to get access to money market, or depending on your risk, just pretty much like what you do with your own currency today, you decide between bonds or equity or anything else. So I think that level of integration with tokenization has to happen, and there has to be a clarity for that.
Amazing. So trust in the global south needs to be built, and of course, we're moving in that direction. But I think Sifu might have the most to say about hurdles. Evan touched on it briefly, the scams and balancing regulatory with scams. Sifu, what do you have to add to that?
Yeah, actually, I'm quick, okay, because I just got the latest global threat report from our foreign guard. Okay, I highlight some related to the fintech or crypto area. Okay, actually, from last year-on-year growth, I see that globally is growth around 54% on the tech. Okay, in APAC, okay, you guess it, how many percent growth? Anyone? Okay, more than 140%, okay, growth on the attack. Okay, I think you know that now hacker is supercharging using the AI for the attack. Okay, but also highlight some attack vector. I think most of us maybe overlook in Web3 or crypto area. Okay, actually, phishing and brand impersonation attack. Okay, is become a very major security challenge, to the Web3 area, So because we see, wow, many crypto users already have been tricked, their credential, or send the fund to the wrong place, through the phishing site, or even though fake mobile app, the portion is very high on that. Also, they will check through even though some fake social media account, maybe hacker may create a fake account to access as your CEO of your company to tricks on some sharing some sensitive information. I think this is very key hurdles or something challenge to Web3 or develop no matter stablecoin or even though or new service, you should have a key major security challenge how to protect your brand. Okay, that's very important, right?
I think most of us understand, or most of the audience will understand RWA, understand PayFi. Maybe slightly less about security. Do you have an exact example that you can give us about PayFi or stablecoins and how security, what kind of security threats we're looking at?
Yeah, I think no matter what kind of industry, secure by design is very important. I would like to share one successful case. We have a customer, global fintech customer, where I opened their name, Pay. They provide the stable coin payment. They adopt our technology for a recon, how to proactive continue increase their visibility on the threat. How to do some scanning or continuous monitor, detect any impersonation website, suspicious mobile application, and also credential leakage. Anything related to their brand. After we detect this threat or some kind of incident, we trigger the immediate alert to them, and also seamless integrate to their security team how to step up to automatically take down the phishing service, and then accelerate the response. That's very key component how to help a customer to mitigate this challenge on especially on some impersonation. Brand will be damaged, your reputation, also lost your trust on your user.
This is very, very true. I guess we are all talking about regulatory clarity. We're talking about educating users. We believe in building trust for the users and ensuring that the assets on-chain are trustworthy and understandable by Web2. Very exciting panel. One final question, going to do it rapid fire, one sentence answer. Looking ahead, what does PayFi maturity look like for institutional finance next 3 to 5 years? One sentence answer. We have 4 minutes left. Let's go. Rita.
One sentence. I think what it looks like is like I said, in 3 to 5 years, it will become a norm for institutions or corporates or individuals to have stablecoin in their account. Now, where that account sits, whether it's in the exchange account or PayFi company account or provider account or a self-custody wallet. That's the question of the decade, right? We'll find out, but I think it will become a norm that corporates, institutions, and individuals will have stablecoin in their account.
Stablecoin is the norm. Evan, your turn.
I would say that you have true decentralized finance with either custody or self-custody solution with full decentralized ID recognized by hopefully BIS or whatever regulatory authority that would actually be recognizing that. And you are then able to invest in whatever currency over whatever assets across the world.
Thank you. And Sudeep?
You'll see a lot of ecosystems owning their economy by issuing their own stable coins, which are largely regulatorily aligned. And you'll start seeing a lot of stable coins coming through, I guess.
Thank you. And Lawrence?
Yeah, okay. Hacker will not take a rest, okay? The attack is more and more, okay? So how you react your hacker, how to fight your hacker, okay? So cybersecurity, okay, or proactive defense must be integral in your service or your platform. Yes, that's a must.
Proactive defense. I absolutely agree, especially in the Web3 space. So this is the panel for the day. Thank you very much for everyone's time. Do we have any time for audience questions or no? Do we have time for audience questions?
We can take 2 questions. We've got 3 minutes. And by the way, we have 1
so
more panel after this. Sorry? We do have 1 more panel after this.
Okay.
So it's not, but we still have time for questions. Anyone? We have some great people up here. We have one here.
Okay.
Sorry.
No?
False auction.
Okay. Oh, I think it's over there. I can't really
Okay, I can see it.
Thank you. Evan, this question is for you. I really love the points that you made, but you made some about the regulators, so I'll probably put this on you a little bit. Would you consider going for a role in regulations so we could have someone very smart like yourself and like Rita possibly and Sudeep and Lawrence? And I think we need more smart people like you on the other end of that. Unfortunately, in many countries that I travel to, we don't meet the best of people on the regulation end, unfortunately. So would you consider that yourself, going that end, just to help everybody out?
No, I won't. Just to be very honest, I mean, I'll say this. My background was I studied undergrad in political science and economics because I have very, very keen interest in public policy. In my non-work, I actually am a chairman of a think tank, public policy think tank. That's why I think policy a lot. Before that, I was running buses, so I was trying to influence policy. I can say this. I said one thing to the regulators before. It's actually, for me, I think it's better to have the impact on the outside than the inside. Because if you're a policymaker, actually, you're part of an apparatus that is very difficult to move forward because you have bosses after bosses after bosses. And even if you're a chief executive of Hong Kong, you still have bosses, right? And it's, and you can say that the bosses are also the people who actually have expectations about you. Now, one thing that I would say is that I'm actually more afraid in the AI age, and this is part that we didn't talk about, cross-blockchain, once you connect global liquidity, you have AI agents running around, what then happens? And there's a lot of danger in terms of the regulators not being smart enough to understand the dangers of what we're dealing with, right? So I would hope that Hong Kong sees the opportunity and seizes it. It's been on the blockchain journey for more, actually earlier than many people. China has been on a blockchain journey earlier than many other domiciles as well. The pace of innovation, the blockchain companies that you have, without talking about crypto, the blockchain companies in China are actually quite amazing. And I do believe that ultimately the innovation, a lot of it will come from this area of the world. And hopefully the private sector, who are more nimble, can actually contribute more. And if the advisory committees, and it is a criticism of mine, would stop putting on people who kind of just look like they're really senior and know shit, but really go into extracting the smartest from the world internationally to advise, then I think we're going to get somewhere. Because I think regulators in the age of AI needs to be really, really smart. And also they need to pay the regulators properly, right? So that's what I think. Singapore has the right model. You're exactly going to what I think is right. So Singapore pays officials in a way that's very competitive. And given there's so much at stake right now in the world, you can't afford to have, people in the government who are not really, shall I say, you don't want people who are waiting for retirement in the government, right? It matters so much.